This video is sponsored by PelucidFX.com.
Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Okay, let's now shift to the gold market. Gold market is usually the choppy and very cunning, but there are some interesting moments have been formed here on the previous session that I would like to discuss with you. As usual, in the beginning of the research, we would take a look at the daily time frame, and I would like to return the discussion of the potential butterfly, since there are some reasons exist that probably market will deal with this pattern. First of all, because the support area stands on the higher time frames, on the really big picture that market stands on the monthly oversold. And usually when the market stands at some long-term support, the retracement, the respect of this support could be extended in time on the shorter time frames. That's why I suppose that just simple ABCD pattern will be a bit too fast for respect of the monthly oversold. So this pattern should be probably a bit extended, so some sort of the butterfly will be more suitable. This is just a bit not pure technical, but mostly as the sentiment analysis, maybe some sort of market mechanics analysis that suggests on a bit more extended pattern as market could respect. Besides butterfly, I think that stands a bit more with the character of the gold market that likes to punish and trick the traders. Those who was focused on this ABCD pattern now could be surprised when the market will take it out of this lows, show butterfly, and then returns right back again. That will be a bit more cunning action, if we could say that. The second moment is a pure technical that stands on the daily time frame. Take a look when the market takes the reversal to the downside or some sort of the retracement to the downside. In fact, that is the 88 deep retracement of that swing down. And this area stands between the 618 minor extension of this ABCD and between the 100% completion point of that ABCD. That is not in fact normal when the market reversal somewhere between of them. Usually market either reversal from the 618 and shows this gradual move down, very weak move that we could expect that market could reverse down from the 618 that was right here. Or finally, if market has broken this area, we could expect the move right to the 100% expansion. Because that's the previous highs, that the stops have been placed above it, that could add fuel to the move to the upside. In this case, this move looks reasonable. But when market takes reversal somewhere between of them, that is a bit worrying. That is suspicious. And at the same time, the 88 level, the 768 level is very typical for the butterflies. When the butterfly wing starts to form, it's very often, especially on the gold market, could start from the 88 resistance. Also, we have inside ABCD pattern, if you remember. So from that perspective, I can't exclude that could be the starting point of the butterfly right wing that leads us to the 1535 area. It's 127 extension. What is more interesting and why I think that this butterfly has exceptional meaning is that the target of the butterfly coincides with the yearly pivot support 1 and the long-term support on the monthly time frame. That is in fact the low of the September 211. That is 2011. That is really significant low, and this is the lower range of the long-term coil. From that perspective, this is really significant event. And if market will react on this support with this butterfly, this will be just the perfect picture from the technical point of view. That's why we should be extra careful and closely monitor the potential development of this move to the downside on the gold market. On the 4-hour time frame, what do we see? recall that we have discussed the trading of this completing point of that ABCD pattern. We said that if you would like enter short, it's probably to make it right here because market will probably respect it. That has happened. And another opportunity was to enter long. So if you are bullish, we said it's better to wait until either break out of this, since in this case we could understand that market probably will continue move to the upside since it has exceeded the target of the ABCD and hasn't shown the reversal to the downside, or wait deeper retracement, deeper respect as the confidence support and trying to enter long from this area. So that has happened. You can see that market has hit precisely an area of confidence support that we have discussed, 1591, 1595 area, and shows the significant bounce from that level. Also, as you can see on the hourly time frame, I will show it a bit later, that was also in agreement with this A, B, C top pattern. Market has hit precisely the 1618 extension. So if you have entered long right here, you could see you have a lot of room and time to think about the moving stop to the break-even or not, holding this position or not. That's why I always recommend to have on the back some significant support area, and better if it will be there in agreement. Now, what to do with this, with overall this situation? What we see currently, market has hit the confidence support, shows the bounce up, this retracement. If market will test it again, that will be, this level will become weaker. And ultimately, we could say that market will probably continue move to the downside if it will take out of these lows. From that perspective, I think that we could start to search for possibility for short entry, but the one moment that is a bit dangerous here is that gold market likes to show the deep retracements. From that standpoint, we could see some sort of the ABCD action to the upside, and it's a bit a question where to take the short position right now or wait some further acceleration. From that point of view, the hourly time frame will be useful. Take a look what is going on here. Here is, by the way, the 1618 extension that we have discussed from that ABCD pattern that was in agreement. I will delete it. Well, now this is the first recovery up, retracement. So we could get either ABCD to the upside, the continuation. This could be minor 618 target or greater target. We do not know it yet, but that in fact could happen. Or we will get the continuation to the upside with this ABCD pattern to the downside, or even with this larger ABCD to the downside. From that perspective, this level will be significant, since you can see trend now stands at the eve of turning bullish, turning bearish, and market is forming some sort of the stop grabber here. So if market will form it, then we probably should be ready for some great retracement. From that standpoint, two levels to watch for: the 768 and 88 retracement resistance levels, where market could end this potential pullback. Or if market will fail there, then probably it could continue move to the downside with the challenging of these lows. In this case, we probably could focus on the entering short with this starting move to the downside with the stops above the swing high, if market will fail in this area. Well, but in general, as we said in our weekly research, and previously we have discussed this moment, that market now is approaching to the moment where the initial panic from the Cyprus situation will be come down, and the first reaction that has triggered the demand for the gold will start to fade out, because now people will start to think what to do with their money that stands in the euro, and that stands on the Cyprus, and in general some reassessment of the attitude to the euro currency should follow to the situation that has happened, particularly, as I said in the euro research, that is in fact the challenge of the private property, because what is the tax that intends to demand on the deposits on the Cyprus? What in fact it is? That is just the stealing. Well, and with the previous attitude to the private property on the euro currency, that it was untouchable, currently it's very dangerous precedent, and in fact people could start to reassess their attitude in the euro union to the private property. From that perspective, some money could be outflow or even converted in other currencies, and the most probable alternative to euro currency is the US dollar. From that perspective, in the nearest from that point of view, in the nearest perspective, the demand for the US dollar could exceed the demand for the gold, and it could trigger the downward action on the gold market. Besides, the overall short-term bearish trend on the gold market still holds, and there is no real reasons for appreciation of the gold to the US dollar currently, because gold trades in relation to US dollar, and in fact this splash up was mostly due to extended demand due to the cyber situation, not because the gold now looks more attractive to US dollar than a couple of weeks before. When this, as I said, will calm down the situation, and the short-term bearish trend probably will return, at least currently I think that we still count on this appearing of the butterfly. At least I think that it could be the butterfly in the current moment. Maybe it will be even the continuation to the downside. But anyway, the ending of this extended demand for the gold probably will come to an end in the nearest future, and the short-term bearish trend could be reestablished. From that perspective, I think that we probably should search for the possibility to enter the short side of the market. And in fact, I can't exclude that this move down is the starting move of the right wing of the butterfly on the daily time frame.